Hello guys, thanks for tuning back in. Just a couple of things I wanted to show you. I've just noticed on the chart, just to follow on from the last video really. I know obviously, lots of us are looking at the bullish structure, and social media and things are all talking about, this this structure at the top here, being as like a head and shoulders, or a complex head and shoulders is probably more likely. Looking now, how things are going now with the price. I think obviously we're going to see got two shoulders there. We've got this shoulder which matches this one. And this right shoulder is going to come down and form somewhere, in this vicinity. That's what we're looking for. That's what we want to see, guys. So for this structure to remain in a bullish formation, and if that happens, then obviously, we're looking at prices, 75, 80, 85,000. So just to show you, for those of you that can't see this head and shoulders pattern, this is the one that we're looking for. This is what we want to see happen. We want to see the prices come back down. Form another shoulder here, and as I say, if this happens, then as some of you will know, I'll show you just quickly. The measured move is like the depth of the head, if you like. So we're looking at the measured move there is 88,000. So that's what we want to see, guys. That's what we're looking for. I just wanted to sort of talk to you about how likely that is, in my opinion, how things are. Certainly, if I put the how low is this right shoulder going to go is probably the question that you're asking. And if I just draw a fib, just to put some science behind where this right shoulder is going to end up, and let's just have a quick look for you. Put the magnet on and to make it accurate. Let's pop that up there and go to the high there. So the 382 there, 73660. Let's just have a quick look. Bear with me. Just trying to get this so it's easier for you to see, guys. So this is the peak here. So I'm measuring from the base of this move here. Small consolidation here, the base of that move. The 382 is at 64,000, 64,785. That would be a sensible target. We don't want to see, obviously, us breaking down below, these lows here particularly. Obviously we don't want to see, closes below that level there, which is 58,316. So we're a long way off of that at the moment, guys. But there's lots I want to talk to you about. So just bear with me for a second, and I'll show you what we're talking about here. If I also put the 55 SMA on there, so obviously 55 SMA comes in at the moment currently at 65,818. So somewhere between sort of 62 and place of 62 and 65,000, somewhere in that vicinity there would be a sensible place for us to be looking for, some kind of bounce activity, and for us to form, that low. So somewhere in this region here. Okay, that's where we're looking to find some support and to get a bounce from there. Okay, so how likely is that going to be, guys? I mean, everybody is tuned into the bullish structure, which I understand. That's the message people want to be hearing. People, things that people want to be listening to. Social media and things gets a lot more interaction with the, with bullish videos generally than they do the bearish ones. But let's just have a quick look at some other things on here. I'm just going to put the bull market support band on there. So bull market support band, again, we're above these lows here on the bull market support band, which is promising. Somewhere in this vicinity, here, at around about sort of 62,000 again, we are going to get the support from the bull market support band. But as I mentioned in the last video, you will notice that the green line here on the bull market support band has crossed below the red line. Now that's a bearish, a significant bearish sign. Okay, so there are some warning signs there, as I mentioned before. So let's just get rid of that for a second. Okay. Okay, so I just want to show you a couple of things, guys. Just overall, what sort of structure are we looking at? So if we ignore our short-term sort of blinkered vision, if you like, of the head and shoulders pattern that we all want to see, the inverse head and shoulders pattern, I should say, that we all want to see, and we just have a quick look at what this actually looks like here. Okay, in a nutshell, this is a series of lower highs. Okay, so yes, you could argue that this is starting to form a head and shoulders pattern, or an inverse head and shoulders pattern, as we just discussed. But looking at this on the face of things, this looks like you've got a series of highs and then a series of lower highs, which is, which is bearish. Okay, so once again, let's just have a quick look and put some other indicators on here to see what we're going to see. Again, just before I forget, another measure for the right shoulder to form here is, if now that you can see that we've started to get, where are we? 1 second. So we're starting to get closes below this low here. So sorry, let me just, so it closes below this low here. So you see that we're starting to break below here. Okay, below these lows. Okay, so what we're doing now is we're forming, this is again another sort of M top pattern as we speak. Now it hasn't quite confirmed yet because the candle isn't closed, but if we do get closes below that low there on today's close, then we're looking at this as being another warning sign. So the price to watch for is 67,507 for today's close. If we get a close below there, then this then again is, for those of you that can't see it, you're actually looking at another what they call an M top there. So you'll get rejection, come back up, check the neckline, then we get continuation to the downside. Okay, so let's watch for today's close. We don't want to see today's close anywhere below 67,514 is the number to watch today, guys. Okay, if we do see that, then we can then use that structure to then to formulate some other analysis here. So you can see that the measured move will take us back down again, not below these lows, which is great. We'll probably get usually on a measured move, generally you can get anywhere between 75% of the measure to 100. So again, we'd be looking at somewhere this closing somewhere in the vicinity 75% of the move somewhere there, which again is 63,000. Which again is confluence with our right shoulder forming, by the other moves, the 38.2 level fib retracement and things. So we are looking. There are some signs to say that we can get, as long as we can get some kind of support and a reversal there, then that would be very positive. I just want to have a look at some of the more powerful signals, though, guys, just to show you, going back to looking at things on a broader scale. And looking at this as being, the double top formation. Okay. So going back to looking at this as a top formation. Okay. Let's just have a quick look, put some other indicators on here just to show. Let's have a quick look at the volume. Okay. So volume divergence is very powerful, very powerful. You can see that we've got a volume divergence here. Okay, so the highs we've got like a double top, slightly lower, but the volume divergence is significant there. Bull market support band. Bull market support band is supporting the fact that we could see a right shoulder here. Personally, I think we're going to break through the bull market support band, as I said in the last video, for the reasons in the last video. And I just want to show you a couple of reasons why. If we just have a look at a couple of other indicators on here. Let's have a quick look at the RSI. I'm sure it jumps out at you guys, but any of you that have any charting experience will be able to see exactly what I'm going to say before I say it. You've got this is bearish divergence. This is a double top here. Yes, this is slightly higher than this one. Okay, it is slightly higher, very slightly, just on this small deviation here. But if you were to just draw a line from the peaks of the peaks of the wicks here, you can see this is a slight deviation. This is a double top. Okay, very slight deviation, which you can discard basically. You've got we've already talked about volume divergence. We've now got RSI divergence. Let's have a look, see what the MACD is suggesting. Again, guys, you're going to be able to see before I even tell you that you've got a huge divergence here. These W's and M's which we watch out for in trading, M tops and W bottoms and things, they do work on indicators as well. So you can see that you not only have you got the divergence, but you've actually got an M top there. Okay, I wouldn't call it an M top because obviously that's not a top, but you've got an M formation and you've got a bearish cross down on the MACD again. So again, that does suggest that there's going to be some further downside. Okay, and I just think, guys, we need to be aware of the fact that this could, we could be at a mid-cycle peak. And I actually think that if we are, that's actually going to be very positive for the future. I do think that the peak of the cycle is still going to be Q3, Q4, 2025. I think that next year, 2025, is going to be, a better year for trading than this one has been. If we do get, this right shoulder form, then as I say, we are going to then see prices, north of $75,000 per Bitcoin. I wonder if we've got the strength after having, the growth that we've had already this year. I wonder whether we will have the strength to break 100,000 this time around, and I don't think we will. Even if we do get up anywhere above, as I said before, 75,000, I think that we need to be very, very cautious at that point. Let's just have a quick look. Just going to draw the peaks from the tops of the previous all-time highs. So just have a look from there to there. Okay, so candle body closes of the highs there, just to see what sort of price target that would give us before we come into that resistance, which that resistance line will be significant, guys. Okay, so we're looking at 85,000. It's interesting that the the measured move of this head and shoulders, if it is an inverse head and shoulders, and we do get this formation and we do get that break, in a bullish structure, it's interesting that $85,000 is a measured move of this head and shoulders. That's interesting. And as you can see, the later that it carries on into the year, the more chance that we'll see, highs later in the year. But so I mean, what we could actually see, let's say, for example, that this does become a bullish structure. We do get some strength in the market based on CPI and all the rest of it for tomorrow, and we do get that, a sudden surge. We come up and we start to make, these highs anywhere sort of mid 80s, shall we say. There's still a very good chance that we still will get, you could still see, this type of formation here. Okay, and then going back to the back end, of sort of next year is when we find that we get the larger cycle moves, as you can see from the bottom there. Okay, so we could see, particularly going into the back end of this year, we could see some nice moves. August, September is usually sort of a bearish month, so we might see, well, obviously we'll see the effect of that, but you can see. Sorry, let me just turn the magnet off. So you can see, what this would mean. I mean, this is a little bit, actually, this is probably a little bit too far exaggerated, but let's just get rid of that for a minute. These are just my thoughts, guys. This isn't, obviously don't take too much, put too much emphasis on where the lines are going. But you can see that if we did get that breakout, it comes up to 85,000, then we come back down. And then we get, the lift off in the back end of next year, mid to the back end of next year. You can see that you've actually got, a huge inverse head and shoulders pattern here. And if that happens and we do get this corrective, move, then, the future is going to be a lot brighter. I think if we continue on too much higher from here, people are saying, oh, the cycle peak is going to end, it's going to be very soon. It's going to be before the end of this year. And that's going to be the end of the cycle and all the rest of it. I don't think that's true. I mean, you can look at the 4-year cycle. Mathematically, the 4-year cycle will always work unless the top 1% decide that they want to change the market structure and collapse that 4-year market cycle, which they could do. The big money have enough money to do that. Institutional investors could decide they want to break the model so that we can't predict as accurately as we do at the moment what actually is going to happen in the future. But for me, guys, I think if we get anywhere up to sort of 85,000, I think we're going to be, that'll be great. It'll be nice, but it will be short term. And we want to see corrective moves, and we want to see the bullish moves really start to take effect next year. Just going back to what I said in the last video, guys, and this is the, you know, the bearish structure, if you like. If we start to look at, let's say for example that we now get this M top here form. Okay, so we've got a long way to go yet, but if we do start to break down below, that's 58,316. Okay, then we will, then, you know, we can start to again put measured moves in place for that. And so if that does happen, you can see, you know, we would have the measured move would take us, as I said in the last video, guys, back down somewhere in this region. Okay, so remember when we spoke in the last video, and, you know, several times over the time that you've been following me on this group, this right shoulder is always very significant in every cycle. So you've got the peaks here, then you've got the right shoulder. This right shoulder is always significant. You can see that, you know, probably roughly 75% of the move would take us down into this area. And as you know, guys, if you watched the last video, this is where I think we're going to end up. We're going to end up somewhere, you know, in this vicinity where we've got, you know, the high here, we've got a series of lows here. So this is the range, okay? And I think this is where we're going to end up. So that's going to take us all the way back down, somewhere between, I'd say probably 45,000, I think. I mean, this is saying, you know, low 40s, 42 to 45. I think we'll probably find the support somewhere between 45 and 47. Okay, as per, you know, the right shoulder, if you like, the peak there. So 45, 47, I think we'll end up down here. And if we do, that's going to provide, you know, a major opportunity. And that's going to be really, then we're going to really, you know, that'll be great for next year. You know, it doesn't help us short term. I know, and I know it's probably not what you want to hear, guys. I'm just sharing my thought. It might be completely wrong. You know, as I say, anything can happen in crypto, but you can see, you know, if you get this formation again, you know, you've got a huge cup and handle, which would then be forming, or you could say, you know, again, you could say it's a, you know, it's an inverse head and shoulders. Excuse my scribble. But yeah, guys, I just wanted you to I just hope that the message is coming through loud and clear. If you look at the indicators, you know, you can see it. You know, if you ignore this type of you know, these indicators that are warning you, you know, to that degree, that prices are coming down. Okay, you know, this kind of divergence and things, you know, it is very significant, and you've got volume divergence as well. The volume divergence is probably the most significant thing on there. So, you know, guys, I just think, I know that it's boring. I know that, you know, I'd love to be able to just say, let's, you know, that we're, you know, absolutely killing it. We haven't been. It's been very quiet, and I think that that's going to continue on. We'll see what the reaction from the market is tomorrow with the, you know, with the CPI news and all those things. But I just think it's a time for caution, guys. You know, there's going to be, you know, I'll be looking and hunting for the moves from the altcoins and things, but I think we're going to need to be trading on very short sort of scalp trade opportunities where we're going for, like, you know, 10% moves, 15% moves, rather than, you know, the big moves that we've spoken about before. But rest assured, guys, this wasn't the bull market. You know, in my opinion, this is nothing that we're going to be expecting. You know, if you look at the last bull market, everyone says, you know, you're not going to get a bull market like 2017. But if you look at the last bull market, you see that the moves that the coins made, and it's absolutely incredible. And we've had nothing like that yet. And I do think that's to come and to look forward to. So thanks so much, guys, for listening in, and I'll look forward to speaking to you soon. All the best, guys. Take care.